Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today, we're looking at a company that's sitting right at the intersection of, well, the two biggest trends in the market.
Yeah.
Cryptocurrency and artificial intelligence. We're talking about Terawulf.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us keep the lights on and the data flowing. Now, let's unpack this because the buzz around this company is honestly deafening right now.
It is.
I feel like every time I open a terminal or scroll through financial news, this name is just flashing neon green. But I have to admit, for the longest time, I just had them mentally filed away in the Bitcoin miner drawer.
Sure, yeah.
You know, the type shipping containers in the desert, rows of ASICs, solving math problems, living and dying by the price of a coin. But looking at the research packet you sent over, that label feels almost dangerously outdated.
It is completely the wrong lens. If you are still looking at Terawulf as just a crypto play, you're missing the entire investment thesis.
The whole thing.
We aren't looking at a miner anymore. We are watching a butterfly emerge from a chrysalis. Or, to be more accurate and significantly more profitable, we're watching a caterpillar turn into a high-margin industrial-scale landlord for the biggest tech companies on Earth.
I love that analogy. So we're talking about a grand pivot.
Exactly. They are executing a fundamental restructuring of their entire business model. They're moving aggressively from pure-play Bitcoin mining into high-performance computing, HPC, and AI data centers.
Okay.
And this isn't just a slide in a pitch deck. It's a physical transformation of their infrastructure.
Okay, let's pause and unpack HPC for a second, because high-performance computing sounds like, a buzzword salad that CEOs throw around to pump their stock price.
It can be, yeah.
Practically speaking, how does this change the business from mining Bitcoin? Why should I, as an investor, care if they're mining coins or hosting AI?
That is the right question. Think of it like this. Bitcoin mining is like drilling for oil. It's a commodity business. Sometimes you hit a gusher, sometimes the price of oil crashes.
Like volatile.
It's volatile. And you have zero control over the price of the asset you're producing. HPC and AI data centers, that's commercial real estate. You are building a secure, high-power facility and renting it out to a tenant like an AI company on a long-term lease. It is stable, predictable, recurring revenue.
Okay.
It transforms the company from a gambler into a utility.
And the market is clearly loving that stability. I was looking at the chart before we started recording. The stock has surged over 200% recently. Just in the last week, we saw a 13% jump. That is a vertical line.
It is. And it's not just speculative hype. It's driven by the sheer scale of what they are building. They are targeting 250 to 500 megawatts of new contracted capacity annually.
Let's contextualize that number. 500 megawatts, is that a lot? My toaster uses, what, a kilowatt?
It is massive.
Yeah.
A typical traditional data center might be 30 to 50 megawatts. Terawulf is aiming to add 10 times that amount every single year.
Wow.
They're trying to build the infrastructure equivalent of a small power plant every 12 months to house these AI brains.
Because everyone is screaming for AI, right? We all use ChatGPT, Gemini, Claude. But nobody stops to think about where the AI actually lives.
Exactly. These models don't live in the cloud, in the sky. The cloud is just rows of incredibly hot servers in a building somewhere. And right now, there is a global shortage of buildings that can handle the power density these chips need.
Right.
You can't just plug an NVIDIA H100 cluster into a standard office building. You will melt the wires. Terawulf is effectively saying, we have the power, we have the specialized cooling, come plug in.
That's the pitch. We have the space. But talk is cheap. I can say I'm building a data center in my garage. Building gigawatts of capacity costs billions.
Who is actually writing the checks here? Is this just debt-fueled speculation where they hope customers show up later?
That is the multi-billion-dollar question. And the answer is what separates Terawulf from the dozens of other miners claiming they are doing AI.
Okay.
They aren't just doing this alone. They have arguably the best validation you could possibly ask for. They have Google.
Wait, the Google? As in Alphabet. The one and only. Terawulf has secured AI hosting deals worth up to $8.7 billion.
Oh, wow.
But it gets better. Backing this infrastructure build-out is Google, with $1.8 billion in support. And this isn't just a generic vendor contract where they buy services. Google has actually taken an equity stake in the company.
Whoa, that's a game changer. That's not a customer, that's a partner.
Exactly.
If Google is putting nearly $2 billion on the table and taking equity, they've done the due diligence. They've sent their engineers, they've looked under the hood, and they decided this engine works.
Precisely. It signals massive conviction. It tells the market that Terawulf's infrastructure meets the incredibly high standards of a hyperscaler.
And hyperscaler, that's the term for the giants like AWS, Google, Microsoft, right?
The companies that operate at a scale where they essentially build their own internet.
Mm.
And when you look at the financial health backing this, it gets even more interesting. Their market cap is currently sitting around $6.81 billion.
Okay.
But what stands out to me, and this is rare for an infrastructure builder, is the debt situation.
Usually, companies building power plants and data centers are drowning in leverage. I assume they leverage themselves to the moon to build these plants.
You would think so.
Yeah.
But looking at the current data, there is no reported debt-to-equity ratio that flags a warning. It indicates very manageable leverage.
Yeah.
They aren't maxing out credit cards to build these plants. They are funding it through these strategic partnerships and equity. They recently acquired 1.5 gigawatts of load capacity.
Which brought their total portfolio to what?
That move doubled their total portfolio to 2.8 gigawatts.
2.8 gigawatts. So just to put that in perspective for everyone listening, a standard nuclear reactor produces about 1 gigawatt. So Terawulf controls nearly 3 nuclear reactors worth of power capacity.
That is a great way to visualize it. And that power is valuable. It's why you see a dividend yield of 0.00% on the stock.
Which makes total sense. If I'm an investor, I don't want a dividend check right now. I want you to take every penny of free cash flow and build more capacity for Google.
Exactly. It's a reinvestment phase. They're pouring everything back into the machine to capture the land grab. If they paid a dividend now, I'd actually be worried.
Yeah, that would be a bad sign.
It would mean they ran out of ideas on how to grow.
So, we have the pivot, we have the Google money, and we have the capacity. But here's where I want to play devil's advocate. Why them?
Right.
Why can't another Bitcoin miner, say IREN or Cipher Mining, just look at this and say, hey, good idea, let's do that too? What is the moat? Is it just that they got there first?
It's not just speed. It comes down to two things: energy advantage and vertical integration. In the world of AI, you can buy the newest NVIDIA chips anywhere. You can buy land anywhere. But you cannot easily buy access to the power grid at this scale.
Right, because the queue to get a new grid connection in the U.S. is like 5 to 7 years long right now.
Exactly. Everyone is fighting for the same electrons. And Terawulf is sitting on a gold mine of green electrons. Over 90% of their power is zero carbon. We're talking nuclear, hydro, solar.
And that matters for the Googles and Microsofts because of ESG, right?
Huge. These companies have promised shareholders and the public that they will be carbon neutral. They cannot plug their new AI clusters into a coal plant in West Virginia without a massive PR and regulatory nightmare.
I see.
Terawulf offers them guilt-free, massive-scale power. The pitch is essentially, come train your AI with us, we won't melt the ice caps.
That's a powerful sales pitch. It solves a political problem for big tech, not just a technical one. And where are these sites physically?
They have proprietary sites with low-latency grid access in New York, Pennsylvania, Kentucky, and Maryland. Two key sites to know are Hawesville, which had 480 megawatts of initial power, and Morgantown at 500 megawatts.
So why does vertical integration matter here? Why can't they just rent the power like everyone else?
Because if you just rent space from a utility, you are at their mercy. Terawulf owns the site, they manage the infrastructure, they're what we call grid positive.
Grid positive, break that down.
It means they interact with the grid in a beneficial way.
Mm.
Because they control the load, if the grid gets tight, say. During a heat wave, when everyone turns on AC, Terawulf can curtail their power usage instantly to stabilize the grid and often get paid for it.
Oh, interesting.
It gives them a cost advantage and a reliability advantage that a competitor who is just plugging into a municipal line doesn't have.
So the moat is, we have the plug sockets, we own the power flowing into them, it's green, and nobody else can get this much juice this quickly.
And that creates high switching costs. Once a company like Google trucks in billions of dollars of servers and bolts them to the floor in your facility, they aren't leaving just to save a penny per kilowatt hour somewhere else. It is incredibly sticky business.
Sticky is good. Sticky means recurring revenue. Let's shift gears to the numbers game. We mentioned the stock is up 200%. Are we buying the top? I get nervous when I see a chart that looks like a hockey stick.
I get that.
What are the analysts saying about the runway here?
The sentiment is overwhelmingly bullish. I'd give it a score of maybe 9 out of 10 based on the institutional data we have.
That is high confidence.
It is. Morgan Stanley recently issued a call that really turned heads on Wall Street. They specifically called out miners that are successfully pivoting to AI, projecting 150% plus upside from here.
150% upside on top of the 200% run. That sounds aggressive.
It is aggressive, but it's based on a re-rating. Right now, the market is confused. Is Terawulf a miner, or is it a data center?
Right.
Miners trade at low multiples because crypto is volatile. Data centers trade at high multiples because revenue is stable. Morgan Stanley is betting that as Terawulf proves this pivot, the market will re-rate them as a data center company. That's where the 150% comes from.
I see. It's not just earnings growth. It's the market deciding the dollar's worth more because it's safer. What about profitability? Because usually these growth stories are burning cash piles.
The trajectory is what matters. For 2026, earnings expectations are a loss of 17 cents per share.
Okay, a loss. We are still in the red.
We are, but context is everything. The prior reported loss was negative 1.13. So shrinking that loss to just 17 cents is a massive leap toward profitability.
That's huge.
It shows operating leverage revenue is growing faster than costs.
That is a dramatic improvement. It's the difference between bleeding out and just needing a Band-Aid. And looking at the price action, we are hovering right near 52-week highs, around $17.70.
Yes, and the volume supports the move. We are seeing about 37.6 million shares trading hands on average. That tells you institutions are involved.
Right.
This isn't just retail traders on Reddit. Big funds are positioning.
Although I did see in the notes that there was some selling. I saw a headline about a fund dumping shares.
Yes, transparency is important. One fund did sell about $12 million worth of stock recently, but look at the timing. It came right after a 200% surge.
Standard profit taking.
Exactly. If you triple your money, you sell a little bit to rebalance your portfolio. It's responsible portfolio management. But if you look at whale tracking, monitoring the biggest wallets, the overall trend in IT and infrastructure stocks like this is accumulation. The smart money is net long. They are buying the dip if it dips.
Okay, so the wind is in their sails, but for the listener who is thinking, okay, I'm interested, but when do I pull the trigger? What am I watching for? Let's look at the calendar. What are the specific dates in the next 3 months that actually move the needle?
There are 3 dates you need to circle in red. The first one is practically tomorrow, February 26th, 2026. That is the Q4 2025 earnings call.
Why is this specific earnings call so critical?
Because the market is looking for guidance.
Yeah.
We know the deals are signed. We know Google is there, but we need to hear management confirm the timeline. This earnings report is being viewed as a re-rating catalyst.
Got it.
If they come out and say the AI deployment is ahead of schedule or we have energized the first 100 million for Google, the stock could re-rate higher instantly.
So February 26th is the big test. It's the proof of concept. What about after that?
March 2nd, they are presenting at the Morgan Stanley Energy and Power Conference. Remember, Morgan Stanley is the one calling for 150% upside. Expect them to parade Terawulf around as their star example of the energy AI thesis. It's basically a massive investor roadshow.
That's a great stage to be on. And the third one?
March 31st, the Jefferies Virtual Power X Coin Conference. This will likely be more technical, giving updates specifically on the HPC side. But really, everything hinges on that earnings call on the 26th. That sets the tone for the rest of the year.
Okay, I'm feeling the excitement, but it is my job to be the buzzkill for a second. We have to look at the other side of the coin. We can't just drink the Kool-Aid. What can go wrong? What is the bear case here?
You have to look at their legacy. They are still tied to crypto. Even with this massive pivot, the stock often moves in sympathy with Bitcoin. If Bitcoin crashes tomorrow, Terawulf will likely take a hit, simply because algorithms and ETFs bundled them together. They haven't fully decoupled yet in the eyes of the market.
That's the crypto drag.
Yeah.
You could be doing everything right on the AI side, but if a coin drops, your stock drops. That is frustrating.
Exactly. It adds volatility that has nothing to do with the actual business. Then there is the valuation concern. The stock is up 200%. That is a lot of fast money. Investors might get nervous and cash out, creating selling pressure.
Makes sense.
And finally, the profitability. We celebrated the improvement, but a loss of 17 cents is still a loss. Trailing EPS is negative 1.42.
Right. Until that number turns positive, they are technically burning cash.
Yes, they are a growth story, not a value story. You are buying the future cash flows of those Google contracts, not the money in the bank today. If the AI build-out slows down or if there are delays in construction, which happens all the time in construction, that burn rate becomes a problem.
So it's a race against time to get those servers turned on and billing.
That is the trade-off. High
Yeah.
growth, high execution risk.
So let's wrap this up. We've covered the pivot, the Google billions, the green energy moat, and the risks. If you had to summarize this opportunity in an elevator pitch, or going from the lobby to the penthouse, What is the verdict on Terawulf?
Here's the pitch. You have a 2.8 gigawatt energy portfolio that is 90% green, which is practically impossible to replicate today because of grid constraints.
Yeah.
You have Google backing you with nearly $2 billion and $8.7 billion in potential deals.
Right.
You're positioned at the bottleneck of the biggest tech boom in history, AI compute. The zero-carbon energy moat is your safety net. This is a massive opportunity to capture demand that isn't going away.
A multi-year hold into the AI expansion. I like it. It feels like buying the railroad tracks before the train leaves the station.
Or buying the power lines before the lights turn on.
Even better. Well, thank you for breaking that down. It is certainly a fascinating pivot to watch. And to you listening, remember that earnings date, February 26th. That is your homework. Go look at the numbers when they drop. See if the story holds up.
And don't forget to look at the guidance. The future outlook is more important than the past quarter.
Absolutely. But here is a final thought to leave you with, something to chew on while you wait for those earnings. We talk about Google backing them, but Google isn't the only giant that needs power. Amazon, Meta, Apple, they are all hungry.
They're all in the race.
If Terawulf proves this model works with Google, who is next? Could we see a bidding war for green electrons between the tech giants? Imagine Amazon or Meta realizing they need to secure their own power fortress. That is when things could get really wild. Thanks for tuning in to Smart Wealth with Joshua. We'll see you next time.